Hey everyone, welcome back. Ready for another deep dive?
Always ready to jump into the market with you.
Well, this week is a doozy, right?
Yeah.
I mean, tech stocks are on fire. Crypto is, well, crypto. And then we got these big players like Nvidia and Target making headlines. Where do we even begin?
Yeah, it's a lot to unpack, but I think what's really interesting this week is how important it is to look beyond those surface level headlines, you know?
Totally.
You see the S&P 500 up almost a whole percentage point. The Dow is pretty much holding steady. It'd be easy to just glance at that and think things are great. The market's awesome.
Right. Everything's fine.
But then you dig a little deeper and you start to see these trends emerge. Some of them are exciting, some are maybe a little concerning.
So it's like a don't judge a book by its cover kind of situation.
Exactly.
Okay, so let's start digging then. What's caught your eye?
Well, the tech sector is definitely still the hot topic. The Nasdaq jumped over 1.5% this week.
Yeah, no kidding. I mean, is that all because of this whole AI craze, like everyone suddenly moving to the cloud?
It's definitely a huge driving force. I mean, companies like Nvidia, they make those essential AI chips. They are in the spotlight big time.
Especially with their earnings report coming up.
Yeah, absolutely. What they say in that report could send ripples through the entire tech landscape.
Okay, so I get that Nvidia is a big deal for AI, but honestly, why should our listener care about some earnings report? What's the takeaway for them?
Think of it like this. Nvidia is like the supplier of picks and shovels during a gold rush.
Okay, I'm listening.
Their chips are totally crucial for all of these AI applications that are popping up everywhere.
True.
And right now, the big players in cloud computing, those massive companies like Amazon, Google, we call hyperscalers because they're just gigantic.
Get it, hyperscalers?
They are spending billions and billions to beef up their AI capabilities. So how NVIDIA is doing, it's a direct sign of how much this AI gold rush is turning into actual money, actual dollars.
So if Nvidia says, hey, we're doing great, making tons of money, does that mean all tech is good? Or is it more complicated than that?
Oh, it's way more nuanced than that, for sure.
I figured.
I mean, yeah, strong earnings would be a fantastic sign, but investors are going to be dissecting every single word that NVIDIA says about the future.
Reading between the lines.
Exactly. Because if there's even a hint that the demand for these AI chips is slowing down, or maybe there's a supply chain issue or something,
the market could freak out.
pretty much, it could get spooked easily.
So it's not just about the numbers, it's about the story behind the numbers.
Exactly. And, that kind of thinking, that careful analysis, it's important in other areas of the market too, take crypto, for example.
Oh, good point. Crypto's always a wild ride.
This week we saw Bitcoin keep climbing, but then Ethereum actually dipped a bit.
Yeah, that's interesting. Bitcoin seems like everyone's favorite digital gold these days.
Right.
But why are those two behaving so differently?
Well, you got to remember that when things get shaky in the broader market, investors tend to look for what they think are safe havens.
Like a safe place to park their money.
Exactly. And Bitcoin, it's got a longer track record,
Right.
bigger market cap, so it might be benefiting from that whole flight to safety thing.
Kind of like when everyone runs to gold during a recession or something.
Exactly that.
So is that why Ethereum is dipping? People just aren't as confident in it?
It could be part of it. See, Ethereum is all about smart contracts and these decentralized applications, right? So it's seen as more closely tied to all this cutting-edge tech, especially DeFi, decentralized finance. That makes it more vulnerable to any shifts in, how people are feeling about the pace of innovation or if there are regulatory hurdles coming up.
So Bitcoin's playing it safe. Ethereum is still in the prove-it stage.
You could say that, yeah. But remember, both of these cryptocurrencies are part of this huge ecosystem. It's all influenced by technology, regulation, and even just, investor psychology.
It's wild out there.
It's fascinating to watch, that's for sure. And volatile. Don't forget volatile.
Speaking of volatile, can we talk about some specific companies? Because there were a few that really stood out to me this week.
For sure.
Like NIO, the Chinese EV maker. They hit record deliveries, which sounds great. But then they issued this super bleak outlook for the future.
Yeah, and then you have Target. They totally missed their earnings estimates, didn't even come close.
It's like a weird combo.
It is, but it shows just how different the challenges are in each sector right now. I mean, NIO, their situation is a perfect example of how cutthroat the EV market is.
Oh, totally. So much competition.
Exactly. Demand for EVs is booming, right? Everyone wants one. But there are tons of companies all fighting for a slice of that pie.
Right, right.
And that can really squeeze profit margins, which makes investors nervous even if sales are through the roof.
Makes sense. But what about Target? I mean, people always need groceries. They always need clothes,
Hmm.
right? What's the problem there?
True, but Target's struggles show a bigger shift in how people are spending. Inflation's hitting everyone's wallet, and people are having to be much more careful about where they spend their money.
So less impulse buys.
Pretty much. And for retailers like Target, that means they're hit from both sides. Costs are rising and demand is weakening. Bad combo. And that can lead to those, big earnings misses.
It almost sounds like Target is kind of like a canary in the coal mine for the whole retail industry.
Oh, that's a great analogy. Like if Target's struggling, maybe other retailers are about to hit trouble too.
Exactly. So what have we learned so far? Tech is doing great, but there might be bumps ahead. Crypto is mirroring all the broader market jitters. And then you have companies like NEO and Target that might be sending warning signals about their whole industries.
You got it. And you know what that all points to?
What's that?
Diversification. It is absolutely key. Don't put all your eggs in one basket, no matter how tempting it seems.
That's always good advice. But to diversify, you got to understand what's happening across different sectors. So let's take a deep dive into a few key industries, shall we? Starting with energy, because that world is changing so fast.
Oh, for sure. The energy sector is incredibly dynamic right now, with this huge transformation happening as we speak. The transition towards renewables is picking up speed like crazy, driven by government policies and tech advancements.
So is it all about solar, wind, battery tech? Like, should our listeners be rushing to invest in all of that?
Well, they are definitely in the spotlight, and for good reason. But being successful with renewables goes beyond just picking a tech.
What do you mean?
Think about it. You need supportive government policies to really make it all work. Policies that drive adoption and create a good market environment. And just as important, you need those technological breakthroughs that are going to make renewables more efficient, more reliable, and cheaper in the long run.
So it's about the big picture. What's shaping the industry? What are the challenges? And how are those getting solved?
Exactly. That kind of thinking is key. And it's important in other sectors too, like finance. I mean, it's undergoing its own crazy evolution right now.
Finance. The world of banks and money. What's shaking things up there? Is it all those fintech apps I keep hearing about?
Fintech is definitely a disruptive force, no doubt. You see all these new companies offering these like super innovative financial services, and they're using tech in ways that traditional banks haven't really caught up with yet.
Putting the pressure on.
Big time. And then on top of that, you have the whole rise of digital currencies, which adds a whole other layer of like complexity to the financial world.
So it's like the Wild West out there with new sheriffs in town and everyone trying to figure out the rules of the game as they go.
It's a good way to put it. And for our listener, what they need to understand is that there are risks, for sure, but also tons of potential rewards. Fintech could mean higher returns, but it often comes with bigger swings.
More volatility.
Exactly. And those traditional financial institutions, they are adapting, but they have their own hurdles to overcome.
So everyone's trying to figure it out.
It's a super interesting time to be watching this space. And for investors who are willing to do their research and really assess the landscape, there are some great opportunities out there.
Okay, so we've got energy going green, finance going digital, and all of this happening while the U.S. and China are playing this global game of economic chess. How does that factor into everything?
Oh, the U.S.-China dynamic is a big question mark for the global market, no doubt. Trade negotiations, the competition for tech dominance, it all creates this like underlying volatility that investors really can't ignore.
So should our listener be panicking? Like hiding their money under their mattress?
No, not at all. Remember what we said. Knowledge is power. Understanding these trends lets you make good decisions, not like knee-jerk reactions.
Then be calm and carry on.
Exactly. And keep in mind, the long-term outlook is still positive, especially for those sectors that are focused on innovation and tackling global challenges.
Always good to hear some optimism. But with all this going on, how can anyone even try to stay ahead of the curve?
Like we keep saying, knowledge is power. Stay informed about what's shaping the market. Diversify your portfolio to spread that risk. And don't be afraid to talk to a financial expert you trust. That's what makes a deep dive like this so valuable, right? It's all about arming you with the info you need to make smart choices.
Couldn't have said it better myself.
Yeah.
We're giving you the tools. Now, before we head into the next part of our deep dive, let's take a second to process everything we've talked about so far. All right, so we just covered a ton about tech, crypto, some of those big name companies making news. But now I want to zoom out a little bit and look at the, bigger picture, the global economic landscape. And specifically, this news about the Bank of England. They decided not to cut interest rates, and it's because inflation in the UK is, well, it's stickier than they'd like. What's the deal there? And, does this even matter to us here in the U.S.?
Yeah, it's easy to think, oh, the UK, that's across the pond, doesn't affect me. But it really does. It's all connected, right? Global economy, everything's intertwined these days.
So explain it to me like I'm 5. Why should I care about what the Bank of England is doing?
Okay, so basically they were expected to cut rates, try to boost their economy a little bit. But inflation is still running pretty hot over there. And that means they're more worried about getting prices under control, even if it means maybe slowing down growth a bit.
Okay, so they're hitting the brakes a little,
Mm-hmm.
but how does that impact someone like me, an everyday investor over here in the States?
Well, think of it like this. When a big central bank, like the Bank of England, makes a move like this, it sends a signal. It's like they're saying, hey, everyone, inflation is still a big deal. We need to be careful. And other central banks around the world, they're paying attention.
So they're all watching each other, trying to figure out the best move?
Exactly. The Federal Reserve here in the U.S., they're definitely keeping a close eye on what's happening in the U.K. because they're facing some similar challenges, right?
With inflation.
Exactly. They want to keep inflation in check without causing, a recession or anything. So the Bank of England's decision, it adds another wrinkle to their decision-making process.
Okay, so global economics, it's complicated.
It is.
But let's bring it back down to earth for a second.
Uh-huh.
For our listener, what does this all mean for their investments? Should they be worried?
The big takeaway here is that interest rates are probably going to stay higher for longer than we initially thought. And that has ripple effects, impacts mortgage rates, what you can earn on your savings, all that stuff.
So higher interest rates, does that mean it's time to, panic sell everything and stash my cash under my mattress?
Definitely not. Panic is never the answer. Remember, it's all about being informed and then making smart choices. So yeah, interest rates might be higher, but that just means maybe you need to tweak your investment strategy a bit. Look for assets that tend to do well in a higher rate environment. Or, maybe it's a good time to chat with a financial advisor and get their take on things. It's about being proactive.
Proactive, not reactive. I like that. So we've got inflation being stubborn, interest rates potentially staying higher. Anything else in the global landscape we should be keeping an eye on?
Well, we can't forget about the U.S.-China relationship.
Oh, yeah, that's always an interesting one. Lots of ups and downs.
For sure. You've got trade tensions, that whole competition for technological dominance. It creates a lot of uncertainty in the markets, and investors need to factor that in.
It's tough, though, right? Because it seems like every day there's a new headline about tariffs or some kind of tech dispute. How do you even make sense of it all?
It's definitely complex, but the important thing to remember is that this tension between the U.S. and China, it's not going away anytime soon. It's part of this bigger global picture that's going to keep influencing the economy, for years to come.
So what's the best way for our listener to deal with all of this? I mean, we've got rising interest rates, geopolitical uncertainty, and the market just seems to be constantly shifting these days.
The key is to have the right mindset. Don't let all this uncertainty paralyze you. Be curious, stay informed about what's going on in the world, and be ready to adjust your approach as things change.
Okay, stay curious, stay informed, be flexible. Got it. But with so much information coming at us from all directions, where should our listener even focus their attention?
Diversification is your best friend. That's always the answer. Don't put all your eggs in one basket, whether that's one company, one industry, or even one country. Spread your risk, invest in different things, different places. It's all about building a more resilient portfolio.
So instead of trying to, time the market or predict the future, just focus on building a solid foundation that can weather any storm.
Exactly. Think of it like building a house, right? You need a solid foundation, strong walls, a roof that can handle whatever the weather throws at it. Same idea with your investments.
Love that analogy. So we've covered a lot of ground here, talking about big picture economic trends, global stuff. But now I want to get a bit more specific. Let's dive into some key sectors that our listeners should have on their radar. And I think the best place to start is energy, because that whole landscape is transforming right in front of our eyes. Ready to talk renewables?
Let's do it. The energy transition is a fascinating story, and there are some really exciting opportunities for investors who understand what's happening.
Yeah, the energy sector's super interesting right now. It's like we're watching a whole new industrial revolution happen. But instead of coal and oil, it's all about like solar panels and wind turbines.
It's pretty mind-blowing when you think about it. So, for someone who wants to invest in this transition, what should they be paying attention to? Where are the real growth areas within the energy sector? Well, solar and wind, they've already gone mainstream. I mean, they're major players in the market now, and they're only going to get bigger. But it's not just about those technologies themselves, it's also about the companies that are like figuring out how to make them work better, how to store that energy, how to distribute it.
Right, because the sun doesn't always shine, the wind doesn't always blow.
Exactly. So things like, advanced battery tech, that's a huge area of growth. Companies that can crack the code on energy storage are going to be in a really good position.
So it's about the whole ecosystem, not just one piece of the puzzle.
Right. It's like we're on this journey to a cleaner energy future, and the companies that can help us get there, those are the ones to watch.
And let's not forget about the role of government. I mean, policies and regulations can have a huge impact on this whole transition, right?
Absolutely. I mean, look at all the countries setting these ambitious targets for renewable energy. They're basically creating a market for these companies, which is a huge incentive for innovation and investment.
So for an investor, it's about understanding not just the technology, but also the political landscape.
It all plays a role. It's a complex equation, but that's what makes it so fascinating, right?
Definitely keeps things interesting. Okay, so we talked about a ton of stuff today, from the AI boom to the energy transition, crypto, global economics. It's a lot to digest. But before we wrap up, I'd love to get your big picture advice for our listeners. If you could give them one key takeaway from all of this, what would it be?
That's a tough one. But if I had to pick one thing, it would be to, never stop learning. The world of finance and investing, it's constantly changing. New technologies, new trends, new challenges. The more you understand, the better equipped you'll be to make smart decisions.
Never stop learning.
Yeah,
I love that. It's great advice for pretty much anything in life, right?
totally. And it's especially important when it comes to your money. Take advantage of all the resources out there. Read, listen, ask questions, stay curious. That's how you stay ahead of the curve.
Couldn't agree more. Well, a huge thank you to our expert for taking us on this deep dive. It's been an awesome conversation, and I know our listeners have learned a ton from your insights.
It's been a pleasure. Always happy to share what I know and hopefully make the world of finance a little less intimidating.
Mission accomplished.
Yeah.
And to our listeners, thanks for joining us on this journey. We hope you've enjoyed exploring the markets with us, and we'll see you back here next time for another deep dive.